They're losing Sunday circulation. They're using what's called street sales. They're losing home delivered, and I've been surprised that the rate of decline has not moderated in the last 5 years. We bought all the papers at reasonable prices, so it is not a great economic consequence to Berkshire. But I would like to see daily newspapers actually, be economically viable because of the importance to society. But I would say that the trends, which I put those circulation figures in there because I think shareholders are entitled to look year to year at what is happening, and it's happening to 1,300 newspapers throughout the United States, and it happens in small towns where you would think that the alternative sources of information would not be that good. It happens every place, and the Journal, the Times, and probably the Post have a viable economic model in the digital world, and probably will continue to shrink. I'm almost certain will continue to shrink in the print world, but the digital world will be big enough that, and they'll be successful enough so that they have, in my view, a sustainable business model. But it is very difficult to see, with the lack of success in terms of important dollars arising from digital, it's difficult to see how the print product survives over time, and I'm afraid that's true of 1,300 papers in this country, and we'll keep looking to see if there is a way to do it. But you'd have to look at our experience and look at the experience of everyone else's. McClatchy newspapers came out the other day, and I think the newspaper, which is very good, fine cities that they operate in, and advertising revenues down something like 17 or 18% in circulation. But it isn't just them; it's everybody in the business. And I wish I had a better answer for you, but I don't. I would say that the economic significance to Berkshire is almost negligible, but the significance to the society, I think, actually is enormous. And I hope that we find something. I hope others find something, because we'll copy it. But so far, we have not succeeded in that. Charlie?
Well, the decline was faster than we thought it was going to be. So it was not our finest bit of economic prediction. And I think it's even worse. I think to the extent we miscalculated, we may have done it because we both love newspapers and have considered them so important in our country. These little local newspaper monopolies tended to be owned by people who behaved well and tended to control the politicians. And we're going to miss these newspapers if they disappear. We're going to miss them terribly. And
I think
I
you
hope
meant
to God it doesn't happen, but the figures are not good, Warren.
No, they aren't. And it isn't just, it isn't some town that has a particular problem with unemployment or anything of the sort. And it isn't due to general economic conditions. It's due to the fact that in this paper, if you wanted to know the baseball results from the present day and the box scores and everything else, they told you the following morning, and it was still news to you. And the financial material that I read from there, in terms of looking at the stock prices and everything, they were news to you the following morning. And what was developing in the Pacific in terms of the war was news to you when you read about it in the morning in the New York Times. And news is what you don't know that you want to know. And those help wanted ads, segregated as they may have been, still were the place to go to look to find a job. And you can go up and down the line, and one element after another, where the daily print newspaper was primary, they're no longer primary. And the business has changed in a very material way, and we haven't been able to figure out any solutions to that, and we'll keep trying. And like I say, it's not of economic consequence, but I think it is societal consequence, and we haven't been able to solve it. Okay, Jonathan.
TTI has been a nice growth story since Berkshire acquired it 11 years ago, more than doubling its pre-tax earnings to about $400 million due to fine organic growth and at least 2 successful bolt-on acquisitions. Business momentum appeared to accelerate in the first quarter. Can you please talk about the competitive landscape in the electronic components distribution industry and what TTI's advantages are? Is it just a great industry to be in, or is TTI's business model and or management team special? Well, do you expect it to continue to be one of Berkshire's faster growing non-insurance subsidiaries?
TTI is run by a fellow named Paul Andrews, who's done an absolutely sensational job with us. He's a wonderful man. He's a wonderful manager. And in the last, he's quadrupled the business basically. But in the last year, and accelerating right to this point, they distribute little electronic components. They're a many billion-dollar business, and their average item is less than a nickel that they sell. So it's kind of like being in the jelly bean business or something like that, except these things go into all kinds of fancy machines that I don't understand. And we have a worldwide operation based in the Dallas-Fort Worth area, and built by one man who left a division of General Dynamics, I don't know, 45 or 50 years ago, and step by step build up this business. Like we just bought, within the last 2 months, we bought an operation in South Korea that will be another substantial addition. We do business worldwide. And electronic components have absolutely taken off in the last year, and they use something called the bill, it's essentially a measure of backlog, and book to bill is the ratio they call it, but it's just kind of a special term. But it's just improved dramatically in the last year, and it continues month after month. So something is going on out there, because nobody buys these things to store them in their basement or anything of the sort. I mean, these get used, these electronic components. Some of them are on allocation. We have a great relationship with suppliers. We have a very good relationship with our customers, because we carry more inventory than most of our competitors. So particularly when the business is tight, we can deliver and do a very first-class job doing it. So I give great credit to Paul. And he increased his physical facility, started on that a few years ago, and it's a godsend that he did it, because with the business going through there now, we wouldn't have been able to handle it. But it's a competitive business. I mean, if you look at Aero Electronics on the New York Stock Exchange, we've got competitors. I think Paul is doing a better job by a considerable margin than they are, and I'm delighted as part of the Berkshire family. There will be times when that business slows down, because their customers will have their own cycles, and when it does, we'll go down. But over time, that business is going to grow. Charlie?
Yeah, it's a wonderful business because it's so difficult to do that competitors don't want to try it. When I lived in Omaha, there was a man who lived in great prosperity and almost no work, and his business was gathering up and rendering dead horses, and he never had any competitors. He used to come up to the Omaha Club and start drinking about 11 in the morning. It was not a difficult business, but nobody ever crowded him with new competition. And very few people want to distribute zillions of electronic parts that are worth a nickel each. It's very complicated. And of course, that business is terribly good at it, and it keeps getting more and more of the same. So you're right, it's a huge growth business, which is sort of the electronic equivalent of gathering up and rendering dead horses.
Imagine keeping track of close to 1 million different items, with very small values attached to them, and getting them out to your customer fast because they want them fast, all over the world, and those things are not easy to manage. I mean,
And staying in stock on so many items. It's very complicated, and that business is very good at it.
yeah, we're lucky.
And of course it'll grow. The horses went away, but these parts aren't going to go away.
Charlie made a profession of studying businesses where the owners could sit around and drink all day and have them. He thought that was where we ought to be competing, but or buying.
My theory, Warren, is if it can't stand a little mismanagement, it's no business.
Yeah. Yeah, and we're testing that sometimes. Okay, station 2.
Hi, Ben Sherbert, Topeka, Kansas. Just want to say, Warren and Charlie, thank you again for hosting us all. This is a great event.
Thank you.
My question is about the recent decision to sell shares back of Phillips 66. Not to put you on the hot seat, but right after that, share prices jumped up about $22 a share. You mentioned at the time that there's some regulatory requirements if you own over 10% of a company. Could you talk about the factors that go into how you decide whether to retain more than that or get under that threshold? And then what are your thoughts long term on Phillips 66, like their business midstream refining?